Okay, quick look through Monday's end of day closing screens. So, not sure how much is going to be on the screens tonight. It's still a bit quiet, but what a fantastic day for growth stocks and small cap stocks. I'm just going to buzz through the markets, and I've shared this one public tonight, so it's a little bit repeat for those in my site, but yeah, I'm just going to jump through the hoops as I always do, and we're just going to talk about the markets a little bit. Cheers, James, Sound and Vision. If anyone's got anything they want to have a look at or touch upon, let me know. So, obviously, you can see the markets coming in, day by day. I'll just go through these markets on a big picture level. There's so much fear out there, and I always say if there wasn't a wall of worry, I'd be worried. It seems like every poster out there, every feed, every podcast, every vlog, all they talk about is worrying about this, worrying about that. There's always another. It was election worries. It was this worries, that worries. It's war. It's inflation. There's always some. I always say there's always some excuse, isn't there, to not be involved in the markets. I know it's really sort of hard, when you it's kind of a bit of a learner cycle thing where you get worried, you flatten all your positions, and then you get bullish again because you see everything going up, and then you load positions again, and then you flatten them again. It's a little bit of a treadmill kind of thing. You can get stuck in this. I call it the learner cycle, I suppose. We all go through it. It's not going to dig at anyone out there. It's we all go through it. I'll tell you how I dealt with it. Well, first way I dealt with it, there was no social media when I was getting my methodology down. I got my methodology down. I back tested it. I put the work in, and it doesn't matter what the news is out there. There's always something. If you want to make money in the markets, you've got to risk money. If you get too emotional and you're too tired up, I always say put the blinkers on. If you like to get bent up on political stuff, and you're probably not going to be very good in the markets. If you get sucked into conspiracy theory, well, you're probably going to have a hard time in the markets. That kind of mindset is always going to be. It's very hard to make money if you're that kind of sort of person. I just zoom out from all that. I don't care what the politics are. I don't care what the opinions are. I don't care, who's in power. I don't care, anything about that. You've got to separate it from. What I do care about is if I'm going to risk money in the markets, I've got to know how much the markets can hurt me, and I've got to know how I allocate. Basically, the job is to allocate risk to the markets and to individual stocks in my case. And my risk management isn't based on someone's opinion who doesn't trade for a living, someone who vlogs every week and has to drag people into, they've got to put these scary headlines, the FTSE 100, the whatever, to get followers. It's not about followers. It's about, at the end of the day, it's about, basically, you put a lot of time into this. You might as well spend that time doing the right things. And that's knowing how much the markets can hurt you. Being at one with how much risk you have in the market. I know exactly how much it's going to cost me if I got stopped out of every position tomorrow, because everything is prepared up front. I know exactly where I'm going to get out of every stock in my portfolio. If they go against me, I know exactly where I'm getting out of those. You don't find this information on Twitter or X. You don't find this information in a magazine. You don't find this information on the news. you find it in your own methodology, in your own risk management. That's where the money is made, you know. So it just, I know I've been banging the drum on this. You know, I know the markets go extremely quiet when things go a little bit drifty, and for that reason, you know, I've been sort of sharing my you know, this is what my portfolio did today. You know, it's new all-time highs on the portfolio, only just, but this is what it's done over the last, where are we now? um, Say 2.5 months maybe. You know, it's gone sideways. Now, I've already kind of covered this today in the radar, but you know, some stocks in my portfolio went to highs and offset other ones what went to lows. When you go into a deeper drawdown, that means, you know, that's when everything kind of comes in together. If you can't basically, the way I mean, you can't see my risk to stops and that in here, but I risk. You know, it's like a clockwork mechanism. My risk in the markets, and you know, I accept a certain amount of drawdown. I'm happy with my portfolio pulling in 10% because I have a little bit more risk in the markets than many people. It's because I'm, you know, I know my methodology inside out, but we don't sort of calculate these things in percent. We calculate them in R, you know, and it's not a case of a stock's in 30%. Look how bad you are because your stock's in 30%. In my world, I'll just bring up TRT because obviously that one's ploughing higher for us today. In my world, it's a case of, you know, giving the stocks the room they need, and it might, the room it needs might be 35% on one stock, it might be 40% on another one, a really volatile one. It might be 15% on another one. You know, that's about position size, and that's how you get a portfolio. What basically you get a little bit more of a linear equity curve, even though I'm trading extremely volatile stocks here. The most volatile stocks, high growth stocks I trade. So you will see these pullbacks. You know, I mean, if you look at the best stocks out there, best trends out there, you will still see 30% pullbacks, 20 to 30% pullbacks. And I always bring up Fever Tree, don't I, and show you that trend with all those big pullbacks and all those excuses to sell that best trend. So it's not about individual stocks. It's about building a portfolio and only pressing more risk into what's working and, you know, never adding to what's not working. And I know it can work sometimes, but on balance, you know, you end up heavier in what's not working, and that affects your, you know, you won't get good returns if you're adding heavily to, you know, across the board to things on weakness. You know, you it's a simple maths thing. You know, it really won't get you there. So if you trade growth stocks, they're going to be volatile. That, you know, that can be backed into with risk management. It's basically what I'm trying to get across here. And the market is not bad. It's just a bit grindy. It's a fantastic market for, there's so many UK growth stocks in our list. It, you know, I haven't got enough cash to spread it around. There's so many good precious metal stocks at the moment as well, you know, and they all came in together, didn't they, last week? They've had a pullback together, and I bet your life that most people puked all the positions. It's, you know, you've got to step out from being one of the herd and to doing something a little bit different, and that full circle. I can trade my methodology because it's based on back testing. It's how I always trade, been doing it a long time. At the end of the day, someone's going to go, I told you that, I told you they were coming in further, and they're going down from here. And guess what? You know, a broken clock's right twice a day, isn't it? And at some point, they will roll over. I will exit the positions. I will put that money into the next position. What wants to go higher and wants to trade that add point for me. That is compounding. Compounding is how your sort of equity curve, how your system exits those trades and builds that equity curve. So that's a whole lot on methodology today, and what's got us through to a new all-time high today. And I had a new all-time high in the more liquid family account last week, and in the volatile small caps this week. I'm just going to buzz through my first things first. I'll just quickly go through why we were looking at gold last week. Those pullbacks on gold, real basic stuff. Just pulling back into a previous level. It's not exactly a big level, and it doesn't mean it will magically hold this level, but that would be an extremely normal area to see when it was trading here. It's about watching the stocks. This day here and this day here, the leading gold stocks started to find their feet and actually turn up. So we saw them in the screens before the gold price. Basically, the stocks led. Not all of them, but some of them. So some of the small caps what had high growth started to perk up, didn't they? And we're going to see a few tonight as well. Let's jump. I'll just jump straight through my screens now. I'll quickly fly through them. If we find one good idea a week, I'd be happy. But one good idea, we always look for a sort of see if there's a good small cap trend idea, and we try and get we see what swing ideas are in the mix as well. Obviously, there's a swing point on gold there as well, isn't there? So I'll just see what gapped up today. Moving on into the closing highs. There's not that many today. In fact, I did miss something what gapped up there. We'll see it on this screen though. So financials, banks, a few precious metals. Oh, there's only one in this screen. I think there's a few in the swing screens. Industrials as well. So let's quickly go through these. See what's in there. ALU. It's going strong still, isn't it, for those who are riding that one? Next, this one's kind of ticked down in the forward numbers, so it wouldn't pass my screens, but it's up near 52-week highs. ELIX continues. Breakout. First pullback. Off it went on its journey. Pay point. Obviously, bit of a. It kind of looked like a base cheat a bit, didn't it, as well? But it hit our screens on somewhere over here, somewhere this day here, I think. And then again, and then off it went. Good forward growth. I'll just bring it up so I can see what we're looking at there. PAY. Yeah, obviously a focus stock. It's high on our sort of watch list, but yeah, gas in the tank. That's why it's trending. TCAP. What a wild little journey on that one, but gas in the tank, that's why it's trending. This one's a lose more scenario. I avoid stuff like this. Like, you know, it doesn't mean they can't trend on the whatever. I mean, in fact, this one's one I wish they'd just delist. but it doesn't mean they can't trend. But you know, I'm not going to trade towards those negative numbers. What brings me on to the next point is, you know, a lot of profit warnings out there in these stocks. What have got no reason, you know, no gas in the tank. They might be ticking valuations, but you know, with no gas in the tank, a little bit of a slight miss on something and down they go, you know. So I enter with a slingshot of growth. I bought this one here. So I enter with a slingshot of growth. And once we go into the next year and maybe there's a dip in the gas, you know, there's, you know, turnover's just gone flat and, you know, the pre-tax might be decelerating or whatever. If it went through its earnings and had a bad reaction or a, you know, a profit warning, it could go down 40% and still not hurt me, is basically what I'm trying to say there. So I'll just show you what I mean. %, and I'd still be break even, you know. Well, I wouldn't, because I've got an average price a little bit higher, but it wouldn't slip. When I say, you know, I haven't had a profit warning, a risk, an outsized loss off the back of a profit warning in quite a few years. And I'll, you know, the last profit warning I had was actually a bankruptcy. When I say, obviously stocks miss, little profit warnings here and there, I mean one what's actually slipped my risk management and took me for, say, twice what I risked on it or whatever. You know, 2R instead of 1. I haven't had one in many, many years. And yeah, that's down to trading growth stocks. Trade the best growth, and once they go into that sort of sideways year where they're consolidating, you know, that big comparable number, you have a cushion, and basically the cushion is means that the worst case scenario could even still be a profit, you know. I did a piece on it for ShareScope actually, and I did cover Boo as well, and I talked about, you know, worst case scenario on when you're adding to something going up rather than de-risking what everyone else does. So have a read of that one maybe. But yeah, you know, we call it cushion. We don't call it risk. It's not risk. It's cushion. You have to have money in the market. You have to have money at risk if you want to get your portfolio trending. It's as simple as that. Moving on. So this is my swing point screen. I'll just fly through this. Pretty much precious metals in here as well. It's pretty much the same story, I would say. So let's just fly through here. See what we see through these investment trusts, industrials. AAZ, yeah, I see a swing point on AAZ there. Obviously, you're just trading on the back of the gate. It's a lose less scenario. Forward turnover is actually down on it. But go back to it. Forward turnover from 46 down to 40 on the turnover. So you're just trading on the back of the gold price there, basically. Kenmare. Kenmare is one. I can't remember what it mines, but it's some of these sort of I can't remember what it mines. I guess I'd just say that maybe it's kind of these kind of battery metal kind of things. It's quite niche what it mines, Kenmare, so it's not a very exciting one. We see the base building on it, potential stage 1 base, tantalum or something like that, maybe some real weird niche deposit, and a few other things. I think might just made that up in my head totally. Let's see. Yeah, the last swing point on LSE was this one here. You know, this was the first pullback really. 350 day in there, first meaningful one. Large cap. We've got one on St James Place today. Obviously, you know, it's not too exciting. These asset managers, STJ, super liquid. I'd say it's more of a swing vehicle myself, but others might argue it was a fantastic swing vehicle for me. This one back here, this was just such a good stock back in 2000, back end of 2012 to 13. But yeah, I kind of see, you know, bump through 52-week highs. We got this gap, pro gap here, didn't we? And a shallow pullback. You know, it might want to come in deeper, but I do see it. We'll try and look for two half decent ideas, don't we? Moving on. This one's expected to post pre-tax profit. So CNE. Tick down in the forward turnover of that as well. So yeah, I think I'll just keep scrolling. Big gap up on I'm not sure what that gap was. Oh, yeah, it had a case go its way, didn't it? It's not gonna light up the growth screener though. Unilever, this is a deep pullback in Unilever after quite a straight run. It's hard to get too excited about these deep pullbacks, but it would be a pretty obvious area for it to find its legs, and it would be an extremely easy trade to manage, as we mentioned on Friday. You know, you could be risking this much to make that much. You know, you could be nimble on it, I suppose. The trouble with these things is that, you know, it could do that and then do a swing point and then turn around again. So I like to go a bit looser on them if I'm putting them into a longer holding period. But so this one here is going to be a story in turnover if you look into it, and probably nothing else. I totally see it. Really orderly sort of little pullback. And what have we got here? Prelims there. So once it gets through that, it could be trading towards slightly better times. Oh, it's not expected to make any money in forever, this one. if ever. So yeah, we just call them a POS. It's a pure technical story play, isn't it? HOC, obviously this one was just really obvious, and anywhere in the right hand side, but it's structurally helping the portfolio. PAF, yeah, another one. It's been on. This one's just gone in melt mode. It's a little bit more of a low beta one. Say that though, it's gone. I probably said that before it broke out this little base. Just take the log scale off so you can see the multiples of risk. Risking that much to make that much. I'd say it's probably 3R or something, isn't it? Without adding. First pullback was here. And then I always, with these later ones, I say, well, it's more likely to be left side of a base than, but, if, I'm doing business here, first pullback here. That's where I'm doing business. Already loaded in. I'm not in that one, but I'm loaded in a few gold stocks. SRB, so we've got the breakout, we've got the first pullback. Yep, that's where I'm doing business. Beaks. So yeah, I've got a position in this now. I took a base cheat. It shot out this. I was looking at a base cheat on this, and I had to move a bit of money around just to be able to do it. But I was looking at a base cheat over this end here. I just thought it looked perfect, but I didn't have any margin to execute, and I didn't have any cash in the account to buy the position. But I bought it today, so I've got a position something like that, and you know exactly what I'm going to do. If it can move above that level there, I will trail and build it back to a full position. That's where I am with that. Do your own research. No crystal ball. GMET. Yeah, this was the old IPO breakout, wasn't it? And it kind of broke out around this area here slightly, and then it meaningfully here. You had this little base here as well, but I think I've done this a few times. I always say the same stuff, don't I? You can't trade a base like this on a stock like this with a stop here on an IPO breakout. You've got to give it a bit of room, and that will be the room to do it. And it came back in. It went back to highs, and trailing add a bit more, and then off it goes. It went sideways back to highs. You'd be something like that now. Pull back into mean trend, pulled in, the first deep retrace, but it's holding in there, isn't it? And so that's working for anyone who took it, and it continues to work. But we had absolutely nothing on it. It's a pure technical play again. It is what it is, isn't it? So that's that. Let's move on a bit more and see what's in my screens. So I'll quickly hit my screener. Let me just drag this over and see what we've got today. SRB, PAF, ALU. So yeah, as we've been through all those already. That's just back to highs. As we know, we've already had a trail point on that. I think we have anyway. I think it's anyone who's in this is probably trailed now. SRB. It's just turning up from. You could call it a base, couldn't you? In our world, this was the pullback area. William O'Neill rule. Throw that in the mix. Breakout, pullback. You want it really to trade above this level here. If it can get up here and start trading up here, you could. My trail. PAF, obviously, it's like I do business on the breakout. base cheap breakout, first retrace. That's my sort of entry areas, higher high areas. But this is a little bit late. You know, it's like the tail wagging the dog, I suppose, trying to get involved on something like this, and it might work perfectly well. And it's trading towards some really good numbers. It's hard to argue with anything about the fundamentals of it. Just say commodity related. We know we've got to deal with the gold price as well. So it's hard to argue with that, but the exposure should already be running. And what else have we got on the other sheet? Just go down that. Yeah, BKS, TRT is basically, it shows as a swing point, doesn't it? TRT. You just know, I mean, this, to get this across, if you look at the stocks what are up in this list, there's a lot of the growth stocks they'll always be in the top end of the list, because this is just every signal in the markets. Yeah, you just got to get to know these stocks, these higher up growth ones. AXL here, I've still got a position in this. It's a wild commodity related, product, and obviously I'm in that as well. It's whipping up and down in a huge, but the position sizing soaks that up. What else is to look at there? I'm just going to move over to my own screen, and I'm going to have a look at a few what are in pullbacks. So basically you can see, can I bring this over? You can see what's in a pullback on my screen. Large cap, BES, BEZ in a pullback there. The large caps will hit the swing screen. You can't swing trade small caps because they've got massive spreads on them. But if it says large and high here, it's always going to be, or mid and high, it's always going to be a swing, nearly always. Swingable stock. ANP, yeah, I've got skin in the game on that one as well. It's obviously in a pretty interesting area. In fact, when you look at BKS and then you look at ANP, yeah, I cheated the where did I get involved on AMP? Somewhere here anyway, in this right side. I cheated the base again, with the market perking up, trailing a few stops. It let me add a bit more risk and add a little bit of cash, and I got involved and I trailed, and I've already added to this above the base, and it could come all the way back in, and it would, it's pretty normal. But I mean, you've only got to look at this one. Broke out, it came all the way hard back in, didn't it? But when it comes to buying stuff like this, because people are trapped up here and the supply, everyone's had a chance all the way up to around here to get out at around break even. Anyone before, overhead supply has memory, and once you get up near 2 years, it's totally gone. Those people are basically, they've puked, they've took the loss, or they've just basically turned their back on it, and it's there in the portfolio. Just they've accepted it and hung on to it. That's supply. That's basically, it's market psychology, isn't it? But yeah, so this shouldn't affect this now. It might do, but sometimes that you'll hit a few levels where I've got a thick band of it. Sometimes the market looks like, it's really respecting these levels, and that's usually found closer, to the price action in a time manner. I'll show you what I mean by that. Breaks down through these levels here, moves back up, bumps right into where the thick band of supply starts. A little bit. See, 52-week highs is here. This is only 6 months off 52-week highs. That's where the memory's strong. As you move forward, the memory, all of a sudden, the memory's just forgotten, isn't it? And if you backtest that, you're going to be up near 2 years, aren't you? From this band here to about here. Almost exactly, I would say. So yeah, that. Notice how I just apply risk management to the price action, but it's not not a case of just blindly doing that on anything. It's a case of knowing what the best growth stocks are in any market environment. The numbers are there. You can just look at the numbers and say this one's got more growth than all these others. And it's not rocket science, but it's the sitting and waiting and waiting for your pitch. Being a goal hanger where price action and fundamentals meet, or fundamentals and technicals meet. So yeah, that's all we've got today. There's not much to look at in the screens at the moment, but it's a fantastic market. Small caps have just really perked up over the last week, and yeah, I wouldn't like to be I wouldn't like to be sat there scared of a bull market. Yeah, obviously all bull markets end at some point, but let's just be let's just be honest about this. We haven't had one in the UK yet. We haven't had a bull market, and the FTSE 100 is not the index to look at. This is just all those big blue chip stocks. You've got to look at the 250. You've got to look at the fully listed small caps, and these are structurally fantastic, and money hasn't even flowed into AIM. But I mean, this is the point I'm trying to make with all this stuff. There's so many grifters out there just with all kinds of sort of giving you the magic PE ratio and everything like that. But this is what the AIM market's doing. I trade. How many AIM stocks am I holding? I say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 AIM stocks make up my portfolio. Let me just go back to that market. 12 AIM stocks make up my portfolio. I've just been rotating AIM stocks in this portfolio. And you can see what's the AIM market done in the last year. Well, it is up, isn't it? Because it was all the way down here, but I have got the numbers up here. If I actually look at them, if I go and look for them, well, year to date, the AIM market's down nearly 5%. Rolling 1 year, it's probably up about 4%. But the portfolio is up 29% on the year. Rolling, it's up 43.6%. They're all volatile AIM stocks, but they're all high growth I'm trading, So what happens if AIM actually comes online? That's what I'm trying to get across here. 91% invested. I mean, the best growth stocks I can find, every time there's a market correction, that it will stress test the portfolios. Some might leave, new ones will be added and continue it. Ones in the portfolio what continue will be trailed and added to. And the job is to get the portfolio trending in the best market environments. Yeah, that's the question. What happens if AIM actually wants to go into a bull market? Because there is no bull market in AIM, absolutely none to see yet, though we can still scrape out those returns. So yeah, that's my sort of to come full circle on all the doom and gloom out there. The markets aren't that bad. AIM doesn't look great, but guess what? The AIM market's full of crap stocks, isn't it? But there's some fantastic growth. That's where you're going to find the good growth stocks. What are really going to compound the portfolio? You're going to be looking in the 250 for some more liquid, higher price ones. You're going to be finding them in the AIM market and the fully listed small caps. That's where you're going to find those ones what really trend. Anybody in chat got anything they want to have a quick look at before we wrap this one up? So what I'm trying to say is just be more positive. Don't put your head in the sand. Be aware of what. Don't think that the news and the podcasts and all the doom and gloomers out there are going to, they shouldn't have an effect on your returns. You should be able to sort of, you can trade the markets we've got and do okay, because there are good stocks out there, and that's something you do with your own eyes. You don't sort of, you don't hit the all long button because someone's just told, someone in a magazine's just written about you should be long, or because Santa's coming, that's not what builds the equity curve. It's about turning up every day, turning over the stones, managing your risk every day, buying the best, adding to the best as they prove themselves, trailing that risk management behind you, exiting without a second thought when your risk management's, your exits triggered, and reinvest in that money in a positive manner with a positive mindset. I will leave it there. Cheers all.